stock at the moment which is under a bit of stress is Bajaj Auto along with Bharti Airtel. For no doing of their own, the Nigerian government has depreciated its currency by 8%, the midpoint moving from 155 to the dollar to 168 to the dollar, accompanied by interest rate hikes as well, reminiscent of what India went through in July of 2013. That normally makes imports very expensive. Rajiv Bajaj exports a lot of two-wheelers to Nigeria, and he's joining us now to assess the impact on his exports. Rajiv, good morning. Thank you very much for joining us. What's the total amount of money you make out of the Nigerian market, and how much will this 8% more expensive two-wheelers impact your earnings?
Well, Lata, there's no doubt that Nigeria is our biggest export market. In recent months, we've actually been doing close to 50,000 motorcycles a month and 5,000 three-wheelers. Obviously, this is an important issue for us. And as you can imagine, we've been tracking it. And so far, from what we understand, the situation is pretty much under control. And let me tell you what I mean by that. I'll break it into two parts. One is as far as volumes is concerned. Volumes are very robust right now, mainly for one reason, that a couple of years back, if I may say so, somewhat arbitrarily, certain bans were imposed, particularly on the motorcycles being plied in places like Lagos. Now, over time, that has got somewhat diluted because people have realized that for last mile transportation, these vehicles are very important, and therefore we are seeing a surge in demand, which explains why volumes in recent months are as robust as they are. In fact, let me tell you this, that concerned as we are with the Forex, we were holding our breath as we were to receive orders for next month, and next month's orders are very robust at 50,000 motorcycles and over 5,000 three-wheelers. So, on that front, all is well so far. As far as the Forex and pricing itself is concerned, the simple numbers would be like this, that typically our products, when they are priced in Nigeria, we work around 160 naira to the dollar. Whereas now we have come to believe that we must come to terms with something like 175 naira to the dollar. Now, this may or may not match exactly with the bank rate, because the bank rate in the end is only a bank rate. One has to also look at the availability of the money, especially for somebody like us who is such a large exporter. And for a distributor to get adequate funds, we are looking more at 175. So 160 to 175, to cut a long story short, is about a 10% change. And I think this will be addressed in three parts, as it always is. One part is to pass some of the price increase to customers. And I think all major players have already done that to a large degree. In the past weeks, we have already passed on up to 4 to 5% in terms of retail price change. So I think at least a third, if not half of this, will be accounted for in this manner. The balance, of course, will be shared between the distributor and ourselves. The distributor has grown strongly year on year with over 20% growth. So clearly there is a possibility for them to absorb part of this because the overheads have come down, etc. On our own part, the situation is like this, that for the first half of this year, we operated at about 60 or 60.3 rupees to the dollar. As we all know now, that is drifted closer to 61.5 to 62 rupees to the dollar. And in fact, going forward, I can let you know that for the next financial year, for example, a very large portion of our anticipated exports is hedged at a minimum of 64 rupees to the dollar. So from 60 to 64 itself provides a cushion of, let's say, about 7% or so. So if some of that has to be sacrificed to keep the business going in terms of numbers and the top line, so be it. So I don't feel that the situation is kind of out of control as of now.
Okay. Rajiv, hi, morning. What are you building in terms of export growth by the end of FY15 to the Nigerian market? And post this news flow, would you scale down your estimates?
As of now, I would not make any change because, as I said, we've passed on a price increase and the rest we are able to absorb, and we are still seeing very strong volumes. In fact, the three-wheelers in particular is growing very smartly, and I would expect that for the rest of this fiscal, we should continue to see more or less the same growth year on year as we have witnessed so far. Now, whether that will be exactly 50,000 motorcycles and 5,000 three-wheelers a month going forward remains to be seen, because this is a somewhat softer period anyway in Nigeria. But year on year, if we were to compare last December to this and so on and so forth, I think we will continue to see a strong double-digit growth.
And what is the market share that you enjoy in the Nigerian markets right now? And post, this particular news flow, do you expect any dip at all in market share?
Well, my numbers are that we have a motorcycle market share of 44%, which is up somewhere between 4 and 6 percentage points compared with the previous year. It is hard to be very precise because data is not so clearly available there as it is here. In terms of three-wheelers, again, it should be around the same number, because the three-wheeler market is really just between TVS and ourselves. We don't have Chinese competitors there as we do in the motorcycle segment. In terms of a forecast going forward, hard to say, but usually in a situation like this, a stronger player tends to weather it better. So I would imagine that if at all, we can hold our own better than some others can.
Okay. What may be the pressure on your margins, you think, Rajiv, because of the Nigerian event?
I would say there would be a likely loss in gain, in the sense that if we were soon going to be enjoying the benefits of 64 rupees to a dollar, which would have moved it up by 7%. If we are, let's say, arbitrarily to give away half of that, we would still be better off. So margins going ahead will be better.
All right. We'll leave it at that. Rajiv Bajaj, pleasure speaking with you. Thank you very much for joining us unscheduled. So, in fact, that's the plan, to pass on half the hike and to take a quarter of the increase in prices on their own books, but not seeing too much of an impact on margins.
Yes.
Actually, countries like Nigeria can go under bigger stress when you're paying higher interest and your, imports into the country, whether it's engineering or consumer durables, are expensive. The immediate stress on the country is very big. So I wouldn't be surprised if the pressure on, selling to Nigeria is very high in this quarter and the next. But then it eases out. You get used to that. The interest rates also can be pared down over time. So I think there'll be 2 quarters of very big stress for those who are selling to Nigeria.